You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Hello, everyone. Good morning, afternoon, or evening, depending on where you are watching us in the world. And welcome to everyone that's watching us live from the LCMS Traders Club as well. And I hope to the members that caught the evening call last night that was of a lot of value. It does definitely look like there was a lot of catalysts around too. So I hope there was a lot of learning done. And if you are trading live as well, I hope that went well for you too. If you'd like to get involved with the live trading in the evenings, as well as getting updates more regularly within the EchoFin platform from the LCMS Traders Club, please visit the Jindal Thai website to get subscribed as well. We are taking on new members too. And doesn't matter what level of trading experience you do have, we can cater to that as well. But just before we get into today, we've got quite a bit to talk about. We've got Jin back as well this morning. We've got Gim going through OPEC and also the upcoming NFP meeting tonight as well. Tonight for us here in the GMT+8 time zone. Obviously, I'll discuss crypto. But before we go into the details of trade ideas and the specifics of that, I'll just share the risk disclaimer too. And I'll read it out as well. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And again, feel free to ask questions during the call here to the members that are joining us. And again, if you are looking to get involved, make sure you get subscribed to the LCMS Traders Club. So we've got Gim Hong here, currency strategist at LCMS Traders, to discuss the OPEC meeting and also the upcoming NFP that is coming up later this evening. So over to you now, Gimmy.
All right, thank you, Scott. TGIF, everyone. Okay, so first item on the list today, OPEC Plus meeting on Wednesday, right? Just a couple of days ago, and what did they actually do? Well, basically they just held its oil production, okay, hike, a change at 400,000 barrels per day, okay? So where is it? Over here, okay, and the decision to adjust upward the monthly overall production by 0.4 million barrels per day, which is 400,000 barrels per day for the month of March 2022. Okay, so that's the only thing that they actually carried out on Wednesday to conclude the meeting. Okay, well, actually, many of the major nations, major countries like the US, they're actually hoping, okay, that the OPEC Plus will actually, increase their whole production hike by more than 400,000, okay, not just 400,000, okay, because of the rising oil prices, all right? So at the moment, okay, let me just show you the price chart for oil, okay? On the left, you can see US oil, which is the WTI crude oil, okay? And then on the right, UK oil, which is the Brent crude oil. Okay, we can see that the WTI, okay, is currently trading at $90 per barrel level. Whereas for the UK oil, it's coming close to $92 per barrel already, okay? So what's with this whole, rise in oil price and things like that, okay? One of the main drivers behind this recent rise in oil price, okay, is because the OPEC Plus is having some issues with meeting their whole oil production hike quota. Okay, so let me give you a couple of examples. Okay, back in December, okay, the OPEC Plus has only increased oil production by 250,000 barrels per day. Okay, instead of the agreed 400,000 barrels per day hike. Okay, so 250,000. That's just like a 63% of what they set out to achieve. Okay, so that's one thing. All right, and then in January, okay, last month, OPEC themselves, not OPEC Plus, OPEC has only managed to hike oil production by 50,000 barrels per day. Okay. So why is it so low, right? You might be wondering. Okay. So actually Saudi, UAE, all these major countries, they are actually, they have been trying very hard to produce more oil, okay, to, hike oil production. But there was a strong decline in Libya, okay. I think it was some 140,000 barrels per day decline in Libya. In the Libyan's oil production hike. Okay, so in general, in entirety, okay, the OPEC only managed to produce 50,000 barrels per day for the month of January. Okay, adding in the other nations, the OPEC plus nations, like Russia and things like that, it's not coming close to the 400,000 barrels per day level, okay, as promised by the OPEC plus. Okay, so with oil production, with the supply, okay, of oil not rising, okay, still falling short from the expected target, that will definitely have an upward pressure on oil prices. All right, so missing production target, okay, by the OPEC plus is one of the reasons why we are seeing a rise in oil prices. Okay, and then another reason is the most recent Russia-Ukraine, political tension. Okay, that definitely have an impact on oil price as well. Okay, and yeah, I mean, depending on how this whole issue will turn out to be, at the moment, definitely, we are definitely going to see more upwards momentum, upside in oil. Okay, and that definitely will have a direct impact on the Canadian dollar. Okay, which later on, Gene will be covering the pair dollar CAD as well. Okay, so that is for the OPEC plus meeting. So for the month of March, they will still, try to hike oil production by 400,000 barrels per day. Okay, whether or not they will do so, we'll see how it goes, and I'll update you guys again during the next OPEC plus meeting in April. Okay, so any questions on OPEC plus? Okay, seems like there's no question on OPEC plus. Okay, so with that, I will move on to pre-NFP. Okay, so as you guys know, the US non-farm payroll data will be released tonight at 9:30 GMT plus 8. Okay, not very good, I would say. The expectation is for 110,000 jobs to be created for the month of January, okay, as opposed to the previous 199,000 jobs being created in December, last December. Okay, so basically this whole I would say decline, in the expectation number of jobs being created is due to the Omicron variant. Okay, so Omicron hits, and then the number of cases rose pretty strongly. Okay, people were sick, unable to go to work. People are tending, are probably like caring for their family members, whoever falls sick to, Omicron variant and things like that. And then businesses were closed temporarily as well. Okay, during the past 2 months, December and January. Okay, so if you look at the graph, okay, we can actually see that over here, okay, is November, right? And then in December, there's a strong decline to there's a strong slowdown, okay, to the number of jobs being created from 531,000 in for the month of let me see. Okay, for the month of October, okay, to 210,000 for the month of November. And then in January, the data release, which is for December, okay, number of jobs increase was 199,000. And then right now, we are actually expecting 110,000 jobs being created for the month of January. Okay, so there's actually a steady slowdown, okay, in the number of jobs being created. So it will not be a surprise, okay, first of all, that the number of jobs, the data to be released tonight will be probably around 110 or maybe even lower, okay. But there's one thing I would like to highlight is this, okay. the US White House, okay, recently has just, I think it was just a few days ago, okay, they actually warned that the data release may be skewed, okay, skewed downwards, okay, due to the way the Bureau of Labor Statistics collects the data, okay. So it wouldn't be a surprise that the data turns out to be lower than expected. But because, okay, the data may be skewed, we may actually be seeing limited downside on the US dollar. Okay, yes, I mean, if the data turns out to be like 80,000, okay, 80,000 jobs being created in January, that definitely falls short of expectation, okay, and even worse from the previous month, okay. Hence, we may be seeing a slight weakening in the US dollar, but okay, it may not be that sustainable, okay, because of the potential skew in data collection. All right. So, in order to for us to get the more, I would say, complete data, all right, for the month of January, we may have to wait for next 1 or 2 months when when the data has been revised, undergo some form of a revision. Okay, just like how we always get data revision from the previous 2 months. All right, so which is why, okay, later on tonight, all right, when the data is being released, I will be around at the Ecofin platform, and also I'll break down the non-farm report once it's being released. Okay, we will have to pay attention to the previous revisions for the month of January and December, okay, because the BLS, they always revise data for the past 2 months, all right, to get a more complete picture of the situation back then. Okay, so the figures will actually let us know how close the US jobs market is towards the from the pre-pandemic level, okay, at the moment. All right, so the revised data will be something that we have to pay attention to as well. Okay, unemployment rate is expected to remain unchanged at 3.9%. At the moment, I would say that unemployment rate may be taking a bit of a backseat, okay, because it's not so crucial right now. If you were to look at a chart, the graph, okay, we can see that unemployment rate is pretty close to the pre-pandemic level already, okay, of around 3.6%. Okay, so this is not a piece of data that, I mean, of course, anything that's unemployment related, we'll be paying attention to it, but unemployment rate may not be that may not go through that big of a change, okay? And then there's this average hourly earnings, okay? Earnings is expected to increase but at a rate of 0.5%, okay? A slight slowdown from the previous 0.6%. Average hourly earnings will be something that we will have to pay attention to this time around, okay? Because it will also tell us how wage inflation has been performing recently, okay? And it will directly link to inflation in general, okay? Which what the Federal Reserve is, paying very close attention to, all right? Because recently they have already, responded to the, 4 decades high level, inflation in the US, okay, by, speeding up QE tapering, by, members expecting more rate hikes coming in this year. So a 3 rate hikes, like 0.25% each for 2022 is pretty much like a default already, okay? So NFP tonight may be, I would say, it may be very volatile, okay, but there may not be big moves. That's something that I have to highlight first, all right? But, okay, like I've said, big moves usually happens when we have surprises, okay? So right now, the market is expecting the jobs market to perform pretty badly. Okay, I won't say pretty badly, okay? I would say like maybe not as good as previous months, okay, due to Omicron variants, right? However, okay, if we were to see the data coming out to be, I don't know, better than previous, better than the 199,000 from January, okay, and we see quite modest, quite good, I would say, upwards revision to the previous 2 months of the jobs data, all right, then we may be seeing a further strengthening in the US dollar, and it may actually be a more sustainable one. Okay, because of the surprise, despite Omicron variant hitting, despite businesses closing down and things like that, people are still going to work and things like that. Then I don't know, for some reason, if they manage to get a job and things like that, that means they are probably not so concerned over the Omicron variant. Okay, but unlikely going to be the case. But still, this will be the surprise scenario that if it happens, we're going to see big moves in US dollar. Okay, and then another data to take note of is the participation rate. We don't see it in Forex Factory. Okay, but in some other economic calendars provided by other websites like investing.com or FX Street, they will have participation rate included as well. Okay, but nonetheless, I'll be covering that tonight with you guys. Okay, once the data is being released. All right. So non-farm payroll data released. Any questions? Okay, so if there's no questions, all right, I will hand it over to Scott for his analysis on DXY. Over to you, Scott.
All right, thanks for that, Gimme. And just in regards to what we did see on the US dollar index, I did mention about the support level that we'd seen, tested recently at around 95.50, and that did break down yesterday as well. It's been a very interesting week, to be fair, in markets. And if you follow the equity markets at all as well, you would sort of agree that it's been the markets are very tentative to go long for a period of time where, you'll get dip buys and then they'll escape and then you'll have more selling. Even though we've seen the US dollar do this with everything that's going on, including the Russia and Ukraine situation, which hasn't got any better. I don't think it's got any worse, but the longer it goes on, logically, it's not a good thing because nothing's been resolved. But from a daily perspective, to see the next level tested, and it's not a particularly significant one, but we have seen buying happen quite aggressively down at around 94.60. If we go to the 1 hour time frame, we're still seeing selling here as well. And we're in a little bit of no man's land currently. And most likely, I did mention that we most likely would see some sideways action in the lead up to NFP, but just going to the news from yesterday as well, there was a little bit going on, but it was more focused on Europe and the UK. So the actual US news wasn't particularly significant. It just looked like there were some outflows of the US dollar. We had the ISM services PMI come in a little bit higher than expected at 59.9, but it's still a very elevated number. And then factory orders were down a little bit. And really, that was the main news, which was ISM services. And then we saw equity markets sell off as well. So it's a bit of a risk-off situation now. But then in pre-market, after the close of the equity session, we saw a lot of rallying take place. So it's markets are easily spooked, but then dip buying is still taking place. So it's, and Gimme just went through everything in detail there. And I would strongly encourage just to be around in the club, the LCMS Traders Club this evening, just to check out how things react to this as well, because that's going to be a big catalyst situation. So just be on the lookout for that. We might really get down to 95 flat here on the index. And then if we see some more weakness, we could potentially see the US dollar drop even further, so below 95. But I think it's going to need that worse than expected non-farm payroll to sort of help with that. But we'll see. It's been quite an interesting event to trade recently, the NFP. So it's very hard to pick, but it makes sense that it's going to be weaker. But again, don't risk too much per trade and be cautious with that. But my thoughts are just stay cautious with the NFP result and stay in the club for potential bounces if we do see a surprise with the NFP number coming in higher. But that is that for my thoughts on the US dollar index. We have Jin back now as well with his thoughts on the CAD pairs. So over to you now, Jin.
Thanks for that, Scotty. So, with the non-farm payrolls tonight, with the CAD employments to be released tonight as well, CAD employment data to be released as well. I do anticipate that we might see some big volatility on the CAD. So what I mean by that is by looking at the news to be released tonight at 9 p.m. GMT plus 8, CAD employment numbers looking to move from that 54, previously 54.7K, looking like it could be a very bad number at minus 121.5K. But more importantly, what I'm paying attention to is also the unemployment rate looking to go from a 5.9 to a 6.3. If these numbers do come out the way it's somewhat projected, we could see some CAD weakness to be applied, along with that dollar or the non-farm payrolls and the US dollar looking at some volatility there. Just to add on to what Scott was just sharing with you is that we saw that dollar weakness being applied last night. I think that the reason for that was because we saw that big upward move in the euro dollar. So remember that the euro dollar has a very big proportion of the dollar index, or the euro plays a very big proportion to the dollar index. So, with that euro dollar moving up, that's probably one of the reasons why we saw that big move in the dollar index heading lower. So what we could expect here on the charts, looking at the US CAD on the H4 time frame, has been sitting in that consolidation. This on H4 time frame, sitting in that consolidation between 1.2717 to about 1.2640. What I'm anticipating is that it's going to stay in this range all the way up to the news release. Likelihood is that we will see it track lower, right? It'll track lower because possibly with some bad news from the US non-farm payrolls, we could see it track lower, that dollar weakness being applied. But overall, I think that the bad news or the likely bad news from the CAD could be a more significant impact, or could have a more significant impact, which would mean that what I'm looking for, or what I would be looking for, is something like that, a buying opportunity as it hits, tracks lower and bounces back off this 1.2640. So for it to break above that point, you could be looking at actually I might move it down a little bit, an entry at about 1.2668 or 1.2670. You could keep your stops tighter at about 50 pips, so just below that support level. I wouldn't go all the way to the next resistance. I would say even if you aim for a 100 pip take profit towards the recent high point of 1.2784 would be a good trade of slightly over 1:2 risk reward ratio towards the upside for the US CAD. This is if we do see that news being applied or the data being released with the weaker CAD employment numbers at about that negative range, the unemployment rate climbing to a 6.3, possibly even a 6.2 will have that same impact. I think that with the non-farm payrolls, we could see that 0.5, that might even be a low 100K number. Unemployment rates might stay at a 3.9 or track slightly higher to a 4. With all that in play, coming back to the charts, I do think that we might see it spike down. I wouldn't be too keen to sell it lower. I would say let it come back up, test that resistance level, that now turned resistance. If it bounces back up to about 1.2670, look for that buying opportunity. For 100 pips, take profit, 50 pips stop loss, a 1:2 risk reward ratio there. But be patient with this news. Wait for that move, wait for it to bounce back up before looking for that buying opportunity. With that, pass it back to you, Scotty.
All right, thanks for that, Jen. And just to finish up, we've got crypto here as well. So just to start with, we'll do BTC against the US dollar now. A little bit going on here as well. So what I will look at is we've got the price currently over 37,000. What has been interesting to see is just with everything that is going on globally, that we still see buyers keen on Bitcoin. We did see a low of 33, and that was briefly touched, and then we took off again, and that was around 2 weeks or so ago. And we did see some more selling. Now, this is the daily candle, so that was on the 2nd. So a couple of days ago when we did see the tech sector begin to sort of turn lower within the NASDAQ as well. So tentatively, it's a tough decision. I think that staying out for now, if you are someone that's looking to hold long term and to maximize an entry of good value, really we're still down at 29 is somewhere where I would say is best. I think in the lead up to everything, with interest rates going up, and there's a lot of speculation about how much they will raise and how many times they'll raise this year, it just seems really that it's a tough one to say crypto is going to be booming in the next few months when everything is going on with inflation. So I would really prefer just to see some lower lows tested down, below 30 would be something. I think 18 I've seen mentioned, that's, that I think that's too low, but you want to see what happens once 33 is broken. If we do see it move lower, you want to see how price interacts with 29,000. So that's for Bitcoin, and Ethereum is really a similar story as well. So with this as well, it's the similar looking chart really, and we saw a break of this hold here. We were around 2300. We did see 2200 broken. Again, that was on the same day, and we have seen a push higher, and the dips have been bought. When it started selling a couple of days ago on the 2nd of Feb, we saw that, and let's just see where this consolidation takes us. But I would prefer to wait again. So down around 1800 would be what I would look for, and that's going to take some time, but I'd really like to see how markets react to the first interest rate rise from the Fed. I think that's going to be something worth waiting for, and not a particularly aggressive stance with obviously waiting, not buying this here, but I just feel that there is some more to give in regards to selling pressure. So that's my take there on crypto as well, everyone. And just make sure if you did miss the show, or you got in late, to catch the replay as well for all the updates and for the timestamps as well. But no questions I'm seeing here in the chat. So that is it. Anything else from the panel, Gimme or Jin? Anything else to add before we end? I think Gimmy's had to take off. All right, excellent, guys. Well, thanks for watching, everyone, and hope to see everyone in the club, and trade safe as well. Bye, guys.